Welcome back to Market on Close. I'm Sam Vardas, and it's time now for Options Corner. Joining me is Kevin Green, Senior Markets Correspondent. Okay, Kevin, so this time tomorrow we'll be sitting on the edge of our seats waiting for Nvidia to drop. So ahead of that, we have seen some green on the screen. What levels are you watching on the S&P 500 heading into the close today?
Yeah, well, Sam, we are seeing a nice little melt up to the upside here. If we're looking at the intraday levels, they're starting with that volume chart. I was actually looking at around that 50-ish area as your area of resistance, potentially some pen risk there as you do have the majority of the options, at least for now, on the SPX 0 DTE options that are expiring here today are sitting at that level. But we actually have seen a nice little consolidation or breakout to the upside. When you're kind of looking at the sectors that are corresponding with this, there is some buying activity happening right now with the industrials. Not a huge sector, but you are seeing some optimism when it comes to Boeing. I'm not sure if there was an announcement around that time. You did see a pretty decent spike in E-mini S&P 500 futures contracts as well. That corresponds with this jump here. So now I'm looking at 64.60 here, but I would still say 64.50 has that pen risk to the downside. Any type of further breakdown, you're looking at 64.30, but it looks like the market is trying to rally here. Technically speaking, if you're kind of looking at the next area to the upside, just from the technical standpoint, you're looking at another 8 points or 9 points from where we are at pretty much right now. So 64.70 technically would bring you at your next area of resistance. So nice move over the last couple of minutes here, last 15 minutes or so, and kind of bypassing some of these levels that we typically see, which is a good thing. Let's see if we can continue to squeeze higher here going into the close.
Yeah, 25 minutes to go. We've got a mixed Mag 7. We've got mixed sectors as well. To your point, the industrials holding up, the outperformer there. We've also got financials up, healthcare up. The laggards seem to be consumer staples and energy right now. What are you seeing, I should say, as far as trends in volume right now?
Yeah, so if we're kind of looking at the difference between up versus down volume for the S&P 500 composite, it's kind of mixed. I would say it's for the most part flat for today, but we actually did see obviously a drawdown yesterday here. So this intraday churn that we are having, the outperformance in the S&P 500 or this move to the upside in the S&P 500 is really kind of corresponding with a concentration of names, at least so far. Now, that could actually change going into the close. Once again, having some other sectors really participate. But the volume is really not too concerning here, either to the upside or downside for today. I think tomorrow, obviously with Nvidia, after the close, this will be probably a little bit more of a bigger focus. We also have some other Fed speakers that are going to be out there tomorrow as well. And then the commentary coming from the White House and this whole thing that's centering around Lisa Cook, which continues to be fairly interesting. But from the volume front, still a little bit light. Seasonality wise, we're kind of still diverging from what we generally will see as far as volatility right now. And until we actually start getting a trend when it comes to volume, especially increasing to the upside here, I would still be cautious on both these upside moves and these downside moves, and still focus on the technicals for the S&P 500, that main channel that we've looked at on the daily chart where we've been in since May. That continues to hold, and we have not broken down. We have not broken out of that range yet either.
Yeah, markets seem to be taking a Trump v. Fed a bit in their stride today, although we have seen that steepening in the yield curve. But we do have some earnings after the bell. We've got Okta, which is a big name, obviously, in the identity and security space, reporting today. Anything you're watching with that one?
Yeah, you are actually starting to see maybe some speculators getting into this name, both to the upside and downside. But I really found what was actually interesting is a downside trade that was placed earlier this morning. Two of them, actually is three of them, for 1,500 contracts. Somebody bought the $70 puts as well as the $65 puts. Now those are going for really, really cheap. They're really, really out of the money. But once again, kind of an aggressive trade to say the least going into this report. Now these options actually expire on Friday, so if you do get an aggressive move, it's going to have to move really close to those strikes in order for it to really kind of pay off meaningfully here. You're talking about having to be around $78 or so. And then to the upside, you are seeing a lot of traders targeting that $100 level for Okta, which is only about $9 away from here. But once again, kind of a trade that's far out of the money. You're still looking at around, let's say, $2 or so to the upside for those contracts. So a significant amount of implied volatility is still there. But I thought the downside trade was actually interesting, given the fact that it's trading at around this $87-ish support area that it's tested over the last couple of months or so. And if we do have any bad news, any type of further breakdown there, right around the next level to the downside is sitting at around $75 or so. That would be actually very interesting if that actually does occur here today.
All right, we'll be watching that one after the market close today. Thank you so much, Kevin Green. Appreciate it.